Predicted Trades family. Hope everybody's doing well. Thanks for tuning in. Let's start with a quick review, and for today I'm going to zoom in a little more than I normally do. Just because I want to talk about how a downtrend started and then got constant continuation all day. And talk about a few key things with some of our tools that we want to kind of put rules around as the day progresses. So to start with, we open the cash session on ES pretty much at the daily 200. We start to get a bounce and get through our moving average cloud that I provide. We got through that moving average cloud, but just to tag the next level and then started to fall back. That cloud, for us to become bullish, needs to flip and turn into a bullish color and up-leaning, MA support. We quickly fell through that MA cloud, and that is where I love to take my entries. I talk about this every day, but this cloud that gets plotted with our price action as it progresses is where I try to take entry for continuation. That is usually the simplest trade when it comes to options trading, to day trading. You want to try to identify the trend and play with the trend. The trend is your friend, right? Coming into the cash session, we were on a downtrend. In fact, the whole overnight for that for Monday was a downtrend from Sunday night. Started way up at 40.75 and just downtrend and open near 40.50. We only got a small pop to 40.60, rejected right near VWAP, broke back below our MAs. Each of those should be signals to go for the short. Right? We open right at the daily 200. Let's see what happens. Maybe it dumps first. Maybe it gets a little support. But then we have to have rules, or at least a premise for what we're trying to trade, where we think the market could be going. And I try to cover key levels every day, but let's just say you want to let the direction start to set itself first. Maybe you don't even get in the call when it starts to take off. You just start to let it play out and then have a rule. All right, well, if we reject this and start to break back through this, I'll get into a short, right? We had a data drop at 9:45 and at 10 a.m., so you could have also timed it with those data drops. We made it up to this, and now we're chopping around. In a few minutes, they're going to drop data, so I'll go short off of this level, risking against high of day. This level being the midline, purple hash line, and our beast tool that we provide every day. So we bounced up, we get our rejection, we break back below our trend cloud, and then we stay below it and fall on the two data drops. We fall right to the daily 8. That's where you want to start locking up your profit, right? Whoop. Where'd we go? Sorry, let me, there we go. But overall, point being, when the trend is kind of pointing in a direction and we start to break back into that trend, definitely a good entry point to follow that trend down. We hit something key like the daily 8 that starts an uptrend for about an hour and a half maybe. No, about an hour. We run into VWAP. We can't get to the daily 200, and we start to break back down below our outer shaded region in our beast tool, our levels. So there's your first sign to short, and then breaking back through the MAs, that's your second sign to short, and get in, at least down to low of day, and that daily 8. And then, we held that, and then started to drop more, and every interaction with our MA cloud caused another rejection. And every interaction is where I'm picking up another short, right? You get in, you lock some profit at your first target, maybe you leave some runners, it gets down further, you lock up more, starts to come back, you pick up shorts again, either adding to your position or moving down to the next strike. But as you can see, we just rejected all day, started a little fight at the end of the day. So definitely use your tools. Don't fight the trend. Try to play with the trend. Now, had we have gotten through the MAs here, consolidated and pushed through VWAP, those MAs would have flipped, come up to support us at a key level, and that would have defined a good uptrend to risk on. Just something I want to point out, that keep an eye on your MA cloud when the day starts. It's definitely going to help you. That's why we try to call those interactions out. I mean, every time we made a climb up to those MA clouds, I said, get ready at the MA clouds. Here comes another opportunity to short. And on SPY, you know, those 402s and 400s worked really well. In the first drop, we got to 402, where they get the money, you lock them up a little bit, you maybe leave some runners, it climbs back up, you hop in the short again when we break back below VWAP, back below our MA clouds, our buy zone here where we should find support. When we lose that support, you want to get into that short back to low a day. And then watch for the interactions with the clouds. You know, we went to low a day, the first cloud caught up, we reject, down lower, back to cloud, lower, lower. And yes, we had key levels of support I talked about in prep yesterday. We have this daily 8, daily 15. We could likely head down and try to settle at those before taking off again. And that's basically what we got yesterday. We just didn't get any good bounces until we got a little past that 15 and fought back above it. Which is looking a little better than like how we interacted with the daily 8. We caught a bounce, and then we just rejected. At least here we fought back above. Once we were below the 8, we never got back above. At least on the 15, a little better. But let's zoom back out to our normal time frames and start to dig into prep here. Come on. And while that's loading, do I still have the 400? Yes, I do. And let me do the 402 as well. Come on. So just since we looked at SPY and talked about that first drop to 402, I wanted to show what the 402 put did. It opened in Beast, dumped a little bit below the bottom of our buy zone, but then when it started to break back above, and when SPY started to reject and fall back down through its MAs, you know, that's kind of where you can enter the short off of our lower Beast, this 37. You can see that on the improvements I'm building into the tool, which is almost, or the improvements to the tool, which I'm testing now, it's almost ready to release. But normally you see these green arrows pop up when we interact with those lines anyway. So there are signals trying to help you out already in the tool. Point being, when we start to break back above Beast and we saw SPY rolling over, That's when you can hop in. Those went from 37 up to $1.20. And then it came back to the same level and to test low of day. And you can see these candles would wick down into that zone. Like, think about, here's low of day, here's that 37 beast level. That creates a zone of support. We arrive there, it wicks down, to tap low of day, but all these candle bodies close above on a 5-minute chart, right? So for 15 minutes, we sat there and we had one tap, and then we started to take off. Those ultimately, from the bottom beast, would fight up, getting to our sell zone where you see some cells popping. Then fight up to the next where you see some more. And from that 37, those went up to about 370 for a 10x. It was a slow grind. But ideally, let's say, if you even miss the first trade, you can still take the retest trade. But let's say you get in the first trade, you get a few, you lock a couple up, you have a runner, maybe you lock it all up. When it comes back, you load up a little more, maybe, like 5, say. Starts to take off. And when it gets to, what'd you get in? Say 40 cents. When it gets up to 80 cents or a buck, lock in a few. Maybe it pays for the rest to just continue. And you can see on a 5-minute chart, and only at one point did we dip below that support just to tag that 95 cents. Then we got back above and rode the trail line. So just a little comparison on that 402 put with our system loaded up. And another improvement to the system, if this looks too busy for some folks, because I know it can be that way, you can come in and turn show all off, and it will just kind of leave the key levels. Get rid of the clouds and whatnot with your entries, your profit targets, and not so much shading and whatnot. So just a little tip for you guys as well. But let's get back to prep. So we pretty much went through review, but worth pointing out that we're arriving, somewhat close, less yesterday's lows, to kind of where we started, where kind of the top of the range, let's say, before we broke out on that PAL speech, right? We fell back and kind of settled into consolidation at moving averages. Then we took off. Well, we can see we fell back at yesterday's lows, right kind of to the top of that. We gave up last week's highs as well, before the PAL as well, right? But I always like to look left and see what did we get back to. So at the very least, there is still an amount of price action and balance down here that is supporting us. And just talking about the premise that we covered yesterday, it was we could dip down to these moving averages, consolidate before any kind of real rally this week to try to get through these highs and this trend line from high of year. We did get that premise where we fell back to these moving averages and are consolidating. But we now have to see, since we slipped a little bit below them, is this just a look below to come back up and take off again? Or is selling pressure really that great to say maybe we aren't going to get back through our moving averages and we set up further downside to to our next moving average. The daily 21 sits down at 39.72 on ES for today. So this really sets your range, and we do have a couple of squeezes going into open. Looks like we've got a 30-minute and a 1 hour, forming pretty much around pre-market or overnight highs and pre-market lows. You can see we have a little bit of an uptrend. We are slipping below it, but also wicking back up on a 30-minute candle. So, pretty tight range today, and some big key levels. This 40-20 was very key. It gave us the bounce, even though we slipped below, right? We tagged that daily 15. That 40-20 was some key support. And you can even see yesterday, it was pretty much the low. It was like 40-22 that bounced. But then we ultimately took it out. It became rejection. And now our daily 8 pretty much sits at 40-20. So big key level to the upside is 40-20. If we can continue to hold 39.96, 4,000. Our pre-market lows and start to push up to our pre-market highs. If we can push through that 40-20, then it's back, it's the goal to get back to the daily 200 up at 40-45. And should we start to give out to the downside, yesterday's low is the first target, and then this 39.80, 39.72, 39.80 key level of support, and the daily 21 at 39.72. If we also look left, getting below the daily 21 and starting to reject, we are likely going to retest this double bottom that we put in at 39.41-ish. Just as an extreme target to the downside. Not saying that we get there today necessarily unless we see a good amount of selling pressure. Excuse me one second. Oh man, there we go. So, as you can see, I don't even have up my normal drawing set with all my key levels. I'll throw it on in a second, but just with our trend tool, our squeeze cloud tool, we can see our pre-market highs marked by those green lines. We can see our pre-market lows, the wedge that we're forming into open. So don't be surprised if we, chop around in this wedge while buyers or sellers try to take control. We're at some big key levels of liquidity, some big key psych levels, and technical analysis levels. So could be a little bit of sideways action while they start to build position for the next leg down or the next leg back up to try to recapture. And as we've seen before, if it is going to be a potential rally week, just saying we are still somewhat bullish, even though we have slipped back. If it does, turn out to be a rally week, they do love to drop it on a Monday just to build up position to keep going up. Before I get ahead of myself, we'll take a quick look at the economic calendar. Monday we had that PMI and manufacturing data that came out that started the drop. Sometimes all it needs is a nudge in one direction and, they start to pile in. Today we have a little bit at 8:30 trade deficit, and then it looks like we're clear the rest of the day. Tomorrow it looks like we've got some labor costs, productivity, and then some consumer credit later in the day. And then Thursday, Friday, we have our jobless claims and University of Michigan producer price index and a little bit of household wealth, domestic growth. So overall, kind of a light week, but and today maybe kind of the lightest. So let's see if they want to come in with some volume today and try to move us in a direction. Or if we stay in this little range of liquidity. Right, spans about 75 points. We're going to be opening kind of in the middle. And we've got our squeeze to kind of give us guidance. If we're going to try to break out, we're going to try to hold these key lows, push up into resistance in this squeeze top, and try to get through and keep pushing up, holding our MAs, our MA clouds, and try to fight back, through this 40-20, 40-30, up to that daily 50 and that 40-50. Or we're going to roll back, start to take out these lows, push against the squeeze bottom cloud, and bounce up to our MAs, push down lower, just like we did yesterday, in an effort to get to this 21. And if it's going to be an overall balance day, we're probably going to stay in these stacked squeezes in between 40-20 and this 39.96, 39.90, back and forth. So the range is set. We kind of know where we can be going to. And now we'll look, watch for the signs with our MA clouds and everything. Also just checking in on our 45 MAs from all different time period. You can see that yesterday we were below the lowest time frames, and even at open we rejected them and the open level on ES and fell down to that 4 hour 45, got a little bounce, then rejected lower. That's also a big sign to short for continuation. We held it, we slipped below it for the first low of day, but then held it on multiple candles, fought back, then gave it out and rejected for lower. Looking at today, we're trying to hold, and we're starting to push back into those lower time frame MAs. So we have some resistance at about that 4005, 4006-ish, and we have some resistance at that 4015. Ultimately, that 4 hour is at that 4023. So getting above 4023 and holding starts to set up being bullish as these 1 hour, 2 hours start to come down close to the 4 hour. If we can get back above those MAs and hold, we could push, pulling those MAs back apart and pushing bullish again. But we do have all of those 4 hour to 1 hour, 2 hours sitting above. If we can clear 4032, it's looking more likely to get back to 4056. So, just a few things to watch for today on thesis and direction. We can move on to NQ. NQ, at least kind of holding the daily 15 and in between the 8 and the 15 pre-market. But in some regards, she was holding up a little better yesterday than others. ES did get below that low from Friday, but NQ did a good job of holding above that low from Friday, and we can see we're getting progressively higher lows overnight. So we have our pre-market lows, our squeeze bottoms, and our daily 15. Let's see if we can hold and start to push through the daily 8 start to get back above that 11,850. If we can move to the upside, we've got 900 and ultimately 12,000 to try it back to. With some levels in between. That 950 was definitely our key rejection point yesterday. If we can get going to the upside. But if we start to give out our uptrend, start to fall below that daily 15 and reject at 11,800, likely going to slip down to test 750 near yesterday's lows, and that daily 21 down at 700 with another big key level, 677. That's your next zone down if we do fall. Anything below that, my next big one is that 11,500 psych level. And obviously there's some in between that, but if we look left, we'd just be falling back into this balance range. You can see when we gave it out here, right down to that level, and then right back through. So, definitely need this to hold today if we start to lose 750 in yesterday's low. On the ready. They definitely beat up the ruddy a little harder, right? And frankly, not surprised to see it, right? Everything pushed up well, and I'd say NQ and YM held up kind of the best. And they beat up ruddy, which is not surprising. Small caps, right? A little more flexible. They run it up harder. They drop it a little harder. Ultimately, we're kind of back in this balance that we were before the run-up on PAL. We've got this 1830, 1827.5, and 1820. Those are providing the next support level if we do start to take out yesterday's lows. But if we can hold yesterday's lows, which pretty much is the bottom of this balance after Monday's low, basically, see if we can hold that 35 from yesterday's low if we do start to slip. But if we can hold that and start to push up through 1850, which was Friday's lows, right? We can start to push above those and turn them into support. Then target is to get back to these moving averages above, pretty much all around 1860, all stacked up. And then try to recover, obviously back up to the balance we had up here. But recognizing the potential start of a downtrend, this would be the support we need to give out to really start to head lower. YM. YM. Chopping around 34,000. Big key psych level. We did give out Friday's lows just by a little bit. Not too crazy, I'd say. Basically 33,000. That 33,900. Very key today, yesterday's low. We need those two to hold for any kind of upside today to get back above 30. Man, excuse me, sorry. My voice is kind of going in and out. All right. Yesterday's low, that 900, looking for that to hold into the cast session if that starts to give out. And we take out 850, then likely going to drop down to that 21 at 650. But if we can hold up here and start to reclaim our daily 15, daily 8, this 34,000, 34,100. Then it wouldn't be too hard to push back to where we were yesterday and reclaim that 34,300 with the goal of trying to get back to 500, obviously. On to Apple. Apple definitely weak yesterday and got back to that daily 50 pretty much, but having a nice gap up back to the 21 and the 8. And back above that 147, 147 and a half, just above near pre-market highs. So, ultimately has kind of reclaimed that daily 21 over pre-market. Well, let's see if that can hold and start to send us up. So basically 147. If we start to give 147 out, we're going to come test 146 likely, and maybe even down to this 145, 144 and a half zone below. But daily 50 also providing that support right near that 146. If we can start to push the upside, need to clear this zone around 140, the top of which is 149 at the top of the squeeze, to try to get back up to that 150. Had that nice strong push in the morning up to 150, put a lot of those puts right at buy zones for the ride back. And you know, where Apple goes, the market goes too, so as much weight as it is, you know, if you're playing spy and whatnot, and maybe you want a little more time on the contract. Point being, I love to play Apple along with the market, and even on a Monday we saw, you know, like in the pop up, the 150 calls were tapped one of our buy zones and provided a pretty darn good trade, and then playing back, like the 149s to 147s all hit certain buy levels of their own and provided a great trade as well and got in the money. But let's see if we can hold that 147 if we start to give that out early, and that little pre-market low. I know we got this wick down here, but if we start to give those out, then it's going to spell a little downside for Apple, which could drag the market. We can hold up and start to push through pre-market high on Apple and hold 147 and a half. Then it could look good to get back to 149 and see a little upside in the market. AMD. Got back to 73 yesterday. So looking for that to hold if we do have a little dip, but nice little gap up. If we can get back above 74. And we're also kind of near Friday's low. So if we can reclaim Friday's low and 74 and hold them as support, then it sets up a good premise to get back to the 75, 75 and a quarter above kind of yesterday's highs. And you know, if we see more upside in the market and in chips this week, the goal is to get back to that 77, 79. If we start to give out 73, back to 72 where the daily 21 sits. And overall extremes, if like we're talking about the market rolling over with chips, you know, the daily 50 has caught up with our 65 level below. Kind of been chopping around it a little bit, starting to get above it. But for those bears out there that think we might be giving out and heading back down, if we give out the daily 21 on some of these names, the daily 50 should be your overall target on a, you know, maybe weekly or 2-week time frame. Amazon made it back to that 91. So basically looking for yesterday's low, 91, to hold up. You can see it has been support many times. So let's see if it continues to be support And if we can start to make that move back to 92, 3, daily 8 at 93.76, all of our moving averages above, we've basically come back to make an H, but let's see if the base of the H holds, we get a little bit of a bounce. If we start to give out, at 89 is the next target down, obviously psych level 90, and we do have a daily squeeze down lower. BA continuing to remain strong. It popped up yesterday, and as the market was slipping, decided to go a little more, and then just sat there. So, strong name. They're continuing to keep it up, and looks like they're trying to get to this 190, 191 key levels I have above. Today, use those squeeze clouds. Let's see if it can hold 184. At the worst, maybe that 183.5 where it topped out before breaking higher. And if we can start to push through 186 back to yesterday's highs at 188 and push to that 190, 191. Cat. I'm coming down near this 230 and that daily 21. Let's see if it wants to give them a retest. If it loses that 21, we do have this level at 228, and it looks like we have a daily squeeze also starting to form, not too far below that. So cat could just take a break down to this daily squeeze, get loaded up to go back to the top, but lots of stack squeezes here. Might not be going anywhere, but could still provide good opportunity as far as getting near the bottom, popping back to the top. If the market's trending with it, that kind of thing, we can see it did go with the market yesterday, down. And now we gap down into kind of the extreme of these squeezes. So let's see if it snaps back. Could lend to some upside in the market today. See how it deals with yesterday's lows and these moving averages to see if it starts to reject, setting in lower highs to get back to this daily 21 and 228 during the cash session. Google. Held up pretty well yesterday and held up above its pre-market lows. Overall, as long as we can still stay above this 98.78 and that daily 8 MA, it's a good spot to go long back through that 100, 101. You know, this is basically a bull flag, and they're pulling it back to the bottom and bouncing it, bottom and bouncing it. So let's see if they want to keep doing that to load up to break out to the upside. Obviously, we start to give out that 98.78, not looking so hot, but we do have our daily moving averages just below. So we know if we do start giving out there, the targets are 98 and this 97 range between the daily 50, daily 21. Daily 50 kind of flattening out and starting to uptick a little bit. So if we give out this flag, that's the next target, which is still bullish because it's still above where we took off from Powell. Overall, I love the way that Google's kind of shaping up here. And we've got our range. We got up to 101 yesterday, back to this 99, and near the daily 8 squeeze bottoms. So play the range until it breaks, long to the top, short to the bottom until we break out. GS definitely got beat up yesterday, dropping below that daily 21 and now arriving at that first Keltner to the downside. So let's see if that 365, 366 can hold today. If it starts to give that out, 360 would be the next target at the next Keltner. I was trying to find that daily 50. She's been pushing so hard and up at that third Keltner for so long. that the daily 50 was left pretty far below. So, if we are talking the bears and you think we're going to start rolling over again off of the daily 200 and daily trend line rejection, GS daily 50, good spell below if you wanted to look a couple of weeks out. But overall, that's quite a distance and thesis. For now, I like to just play the current price action. Let's see if we can hold that first Keltner, 365, 366. If not, we could be going to that 360. But if we can hold there, looking to get back to this daily 21, 373, and try to recover back to 380 where we were. Could just be a reset after riding that third Keltner up. But we've overshot the mean just a little bit. We're kind of near that first deviation down. So let's see if that's the spot to bounce back above. Let's go to Meta. Yesterday, just like Google, looks like communications held up well, XLC. So let's see if we can continue to hold that 121. 120 starts to put us back down near the daily 50 and breaking out of the squeeze bottoms. So ultimately, let's see if we can hold 121 and try to push back through 123. If we were to break out to the upside, next target, that psych level 125. Next Keltner up is up near 128, and that's psych level 130. But if we keep rejecting 123, take out 121, and start to fall, daily 50, first target, near 119.5, then daily 8, daily 21, and that 114 that we took off through, and that was kind of resistance. On to Microsoft. Slipped below 250, but held that Friday low. So buyers stepping back in there, and now we're, kind of set to open above 250. Let's see if that yesterday's low, 248, can hold if we do get down there. But we are back above the daily 8 and that 250. So that zone of support could hold, and we could start to recover quickly on Microsoft. Ultimate goal, trying to get back to where we have been topping out a little bit and expanding our lows, which would be quite bullish, right? So let's see if we can hold this base and start to fight back, showing that we are fine with the daily 8 loading up off of that liquidity zone to try to push higher. If we can get through that 255, ultimately that 200, daily 200 is sitting up near 265. A little bit past this 2-day squeeze at 360. So let's see if the flag at bottom can hold on this move up. Also near those highs from Thanksgiving week. Lots of support there to try to keep on going. Obviously, if we give out back to these daily moving averages. Netflix. Slid back yesterday trying to hold 310. Let's see if it wants to take a quick dip to this 307 zone again. Friday's low before fighting up to that 320. As long as we're above that, I'm still looking long. It's also where we topped out on that Wednesday. So it's a great spot to load any longs to the end of the week. If we start to give that out, then in that daily 8, then heading back to this 300, and maybe down to this daily 21 at 292. Those are recent highs Thanksgiving week. So let's see if the flag can hold. Targets to the upside, getting up to 333, which that third Keltner has almost got to, and fills the old gap past that 340. NVIDIA did a great job holding up at the daily 8 and Friday's lows. So let's see if that can continue to hold. If it gives out, down to the daily 15 at 162. Anything below that, obviously this recent lows, but we do have the daily 21 right around that 157.5-ish. And that cycle level 160, obviously, but let's see if we can hold up at the daily 8 in these squeeze bottoms, start to push back to 170, 172, and get back to that daily 200 at 176. QQQ. Made it back to that daily 15, daily 8, squeeze top, squeeze bottom. Obviously we got our range set today. You know, basically that 287 to 288.5. Play the range till it breaks. If we can get above 288.5 and continue to hold our MAs and those pre-market highs, looking to push back to 290, 292, and 295. But if we start to give out the daily 15 and these squeeze bottoms and the MAs keep pushing us down back to 285, the daily 21 here, should those things start to give out, we could go right through this, maybe thinner structure to 280, where we double bottom. SPX. Left a little gap behind that we want to mark, because if we do start to go to the upside, yeah, close enough, we'll have to deal with this gap. So let's see, going to be having basically a flat open. Close around this daily 15. So let's see if we can get back above, basically 4,000, turn it into support, and start to push back to the daily 8 at 40.20. Just like on ES, same range with these moving averages. If we keep projecting 4,000 and take out yesterday's lows, might just make it back to that daily 21 at 39.62. Below that, recent lows, where we double bottom. SPY. And Johnny, yeah, I see your question in the chat. I can go over that at the end here, no problem. So it's SPY, just like ES, getting back to that daily 15. Let's see if we can hold yesterday's lows, get back above that 15, back above 400, 401, to try to push back to this daily 200. But if we start to give out yesterday's lows at 398, then likely coming back to 396 for this daily 21 sets. And those are recent lows. And, mark your trend lines from highs, right? Because if we can get anything going to the upside, we'll be dealing with them, if we can get through this daily 200, we'll be running into that trend line from highs. So, that did not grab it all where I wanted it to, but we'll leave that. So yeah, a little bit of a wedge if you were to connect some of the lows here and the high there. Let's see if we just settle into that wedge or if we just keep breaking down. Tesla. Back near this 180. Let's see if it wants to get down there and give it a full test. Basically if we get below that 178, we're giving out a lot of the buyers that have been trying to take it higher. And it could accelerate back down to this zone in the bottom of this daily squeeze. But if we can continue to hold up 178, 180, just because she was pretty weak yesterday, so if she's weak early, we need that zone to hold. If that starts to give out, it spells a little more downside. If we can hold, looking to get back above 185, make that journey back up to 190 and 200, right? Got our moving averages above as targets as well. Let's see if we can hold yesterday's low and that key level. UVXY. didn't get going too crazy yesterday in that sell-off. It was, pretty much a controlled kind of sell-off. We got up to this first trend line that I had drawn. It was from more recent price action. We have another trend line from a larger time frame. And you can see we kind of rejected the first one and back below. Let's see if we can continue to stay below. And ultimately stay below this 7.5, 7.45-ish. So for like upside in the market today, would love us to stay below this trend line. If we do get a little bit above it, want us to reject that 7.5, yesterday's high, 7.4. Ultimately get below this trend line and start to head lower to 7 in the bottom of these squeezes. But if we do start to break back over and get through 7.5, it could spell more downside for the market. And we'd come up to test this next trend line at 7.6, the daily 8 there as well. On VIX. Also, nothing too crazy. We held 20, we got to 21 and a little above. Now we're back below 21. So the range is set, 20 and 21. If we're going to see more downside, we'll likely see VIX get back above this daily 8, use it to push through 20, and we do have some squeeze tops, but ultimately push up to this 21.5 daily 15. And a journey to try to go from the 8 back to the 21. But if we can stay under 21 and this daily 8 and start to roll over and take out our pre-market lows, we could see some decent upside, looking for VIX to get back to 20 and maybe head back to 19 again at the bottom of this 2-hour squeeze. So we're near the top of that squeeze and tapped it. Let's see if they retest it, which would give us a little dip. Or if we take out some of these pre-market lows on VIX and start to head right on back to the bottom of the squeeze, it'd be nice for the upside. Oh, and then if I cover XOM. And let me just step out to a slightly higher time frame, just so I can see a little more history on her. I haven't checked in on it in a while. It is arriving at the daily 50. Let me just step out to, there we go. There we go. So made a nice big strong push up. We've gotten all the way back to the daily 50. Yeah, could be coming to a critical decision point on XOM. This daily 50 at 105 and some change. In this second Keltner, kind of the zone of support that needs to hold. We are setting some lower lows. Our third Keltner is expanding down near 100. And we have October highs around 103. So if we do continue to slip here on Exxon, past that daily 50, basically downside targets, daily 50 at that 150.3, let's say, 105.3, sorry. That daily Keltner, 104.5-ish. This recent high at 103, we'll call it, 103.3. And then that third Keltner near that 101.5, 102 would be downside targets if it can start to hold at this daily 50 and catch a bounce off of this daily squeeze bottom, which has not quite fired to the downside, although the other squeezes have. If we can catch a bounce there and start to head back up, upside targets looking to get back to that 107.5, 108, bottom of that balance range. So a look below and a hold of the bottom of the balance, and then a fight back up to that 110 where the daily 21 sits, as well as the daily 8. basically from the bottom of that balance range to the middle and then trying to get back to the top. But as this is slowly starting to break down and head back, could mean that daily squeeze is starting to fire. We're giving up this balance area and going to head back to test this previous wedge. Kind of my overall look at it. Hopefully that's helpful. And yeah, feel free at any point to call out any tickers. I'll definitely check them out, usually at the end, because I like to just get through my normal spiel and then have a few minutes to digest the chart to at least give some guidance. So, good luck today, folks. Looks like ES has slipped a little bit since that data came out. Let's take a jump back over to ES, and I always use ES first as my main gauge, right? I will then look at SPY, I will, look at SPX when it opens, but ES is my main gauge. It gives me more data going into open. SPY's moving. Now, this has got to reset the time in a second. There we go. So it looks like we're tapping the bottom of that hourly squeeze and finding support a couple of times pre-market. We're also at our open range buy zone. The top of that squeeze sits up at our open range sell zone. As if by magic. So we have an hourly squeeze. We've basically gone sideways in between our buy zone and sell zone. Again, we provide these levels every day in our tool. We update that tool every day because numbers move around, levels move around. And if you don't have an up-to-date tool, these buy and sell levels will be vastly different, especially as time progresses, as the data deteriorates, because they're constantly on the go. But ultimately, we've had our overnight low. We have our, we're going to be opening right in our open range on futures. So it'll match up pretty close to SPY. Well, let's see. We've got our buy zone. We got our sell zone. Let's see where they try to take it. We've got our squeezes so that we have a good idea if we start to push through, say 40.25 or down through 39.85 or yesterday's lows, right? 87.85, then we're breaking down. So good luck today. Thanks for tuning in, and we'll see everybody in the chat.